Brexit vote is closing in extremely fast, traders. Is this going to be the week where we see an increase in volatility? Let's talk about it here at Capital Markets. Traders, what's up, guys? Welcome back to Capital Markets. It's your host here, Cleveland Bishop. Hope you guys are having an exceptional start off to the week. So far, we have seen markets somewhat calm after last week's CPI, PPI, and retail sales numbers came out. CPI did come out a little under expected, and PPI also, of course, did come out a little bit under expected. Now, what is CPI? PPI, if you guys are new, CPI is Consumer Price Index, okay? Consumer Price Index is the relative pricing of consumer goods in an economy, okay? The pricing of a haircut, the pricing of food, the pricing of gas, all right? The pricing of gas and the pricing of energy actually gets taken out of CPI and is called core CPI, but it's still oftentimes included. Now remember, oil prices are very volatile, so you don't want to see a skew in your inflation numbers. Consumer price index is usually correlated back over to inflation. You don't usually want to see a skew in that number, and they will exclude oil, and they will exclude food prices as well. Now, PPI, that's Producers Price Index. Well, consumers pay one thing, but producers pay another thing. Usually they're going to be paying lower costs because they're manufacturing the goods, but we can still track how expensive and the price fluctuation of those goods. That's Producers Price Index. Okay, so again, those numbers did come out negative, which did sell the dollar off just a bit, but the dollar ended up staying inside of the range where it is right now. Here's a quick screenshot. You guys can see that the dollar is still floating around the $1.12, $1.13 area. We have not escaped this massive consolidation that the dollar has been in for such a long time. We'll see what happens by the end of this week and maybe upcoming NFP to see if the dollar wants to start gaining some actual strength. Now, outside of the dollar, we have to talk about the pound. The pound currently right now, we are still seeing the pound still again consolidated, selling off quite a bit, but consolidated in its 2019 lows. We did make a lower low for a split second during the rejection vote that happened 2 or 3 weeks ago. Here's a quick screenshot of that there, probably about 3 or 4 weeks ago. We did get the lowest low we have seen on the pound since then, but there has not been too much of a massive push outside of that level currently right now. Now, we have March 2nd up until this Brexit vote needs to happen, and people aren't very certain that the pound is going to clock in on some gains. But what are we thinking here on our end at Capital Markets? We assume that the Brexit vote is going to be passed, but we think the deadline is going to be extended. Right now it's February 19th, so that means that there's only about 12 or 13 days or so up until the Brexit vote. This is going to be a very, very important week for the pound. Now, outside of the pound, Aussie and New Zealand, those are two economies that usually start to see a little bit of an up move when global markets get a little bit weaker, kind of like the CHF and the JPY. Right now, we have seen the Aussie dollar and the New Zealand dollar, again, selling back off a bit, mostly because of the trade war negotiations have now come to pretty much a stall when it comes to China and the US. Now, trade, when it relates to Australia and New Zealand, these are two economies that are literally on the back or growing off of the back of the Chinese market. So it's going to be very, very important for us to keep an eye out on what happens when it comes to trade war in regards to China and the US. Now, again, talking about the Japanese yen, we have been seeing the Japanese yen. Here's a quick screenshot of the USD-JPY. We've seen the USD-JPY go up and up and up relative to the dollar week after week. You guys can see last week we did make a 2019 high for the Japanese yen. Usually when you get a weaker yen and a weaker CHF, usually that's because global markets are calming down a bit as opposed to what we're seeing over in Australia and New Zealand. Are we going to continue to see this Japanese yen selling off? Well, we think so. We think the Japanese yen was massively overbought. When it relates back over to what's happening right now in global markets, isn't too many calamities going on, but hey, this is also a good thing for anyone that thinks there might be some future tense and tension coming in on some of these markets, because that just means you might be catching this JPY at a discount. So we're going to keep an eye out on all these markets and see exactly what is going on. If you guys are looking for a broker and you want to trade with a trusted broker, I would head over to capital-markets.com. We're one of the best brokers in the entire industry, and we route from some of the best liquidity providers. That means you guys are going to be filled instantly. There's very, very little slippage. We also have very tight spreads. Every trader in the world knows what spreads are. That means every time you place a trade, you're going to be paying less and less and less per trade because our spreads are extremely tight. Guys, head over to capital-markets.com. Tomorrow we're going to be getting a little bit more details as to what's going on inside of the UK to give us an idea as to what we could possibly see happen when it relates back over to Brexit. I'm Cleveland Bishop. I'll talk to you guys tomorrow.